profit is not equal to cash. A company may be profitable, but it may not have cash, and vice versa. And that's why the need of preparing cash flow statement arises. Namaskar, welcome to Investing Mastery Series by C. Amit Pobar. In this Investing Mastery Series, we're going to give you absolute A to Z detail about how to go about investing, and we have covered a lot of topics in this Investing Mastery Series. If you've not gone through earlier videos, two requests. First, subscribe to my channel, push the bell icon so that whenever a new video comes, you get the notification. And second, watch all the past videos and then jump onto this. So having assumed that you've gone through all the videos, let me start with this amazing video of cash flow statement. So since last 3 days, we have been learning P&L, that is income statement. Yesterday we understood balance sheet, and today is the time to understand cash flow statement. Now, before I talk about what is the format of cash flow statement and all that, I need to give you some idea about why cash flow statement needs to be prepared. So, my dear, please understand there are two types of accounting system. One is a cash system and one is an accrual system. Again, I'm presuming that you are coming from a non-commerce background, you are an absolute beginner. So I'm going to conduct this video accordingly. If you are coming from a commerce background, or if you know all this thing, you can watch this video at 1.5x speed, right? Okay, so there are two types of accounting system, cash and accrual. Generally, accounting system widely followed globally for accounting purpose is accrual. Okay, generally accrual system is widely followed, for the accounting purpose, and that's why the need for preparing cash flow statement arises due to the accrual system of accounting. Now, what is accrual and what is cash? We will try to understand with a very, very simple example. For example, Mr. Shah Rukh Khan has a shop where he sells school uniform. Okay, our Shah Rukh Khan sir is selling school uniform, and two girls went to her shop to buy her, school uniforms. Very interesting examples. Just follow me and you will understand everything. Okay. So now what happened is she purchased the uniform. Her name is Tinu, and immediately she paid Shah Rukh Khan sir 1,000 rupees. That was the cost of uniform, and she immediately paid it. So Tinu bought a uniform, paid 1,000 to Shah Rukh Khan, and went her home. Her friend Sonu, she also purchased, because Shah Rukh Khan sir was very reputed in the town and everybody used to purchase from his shop only. So Sonu also purchased the uniform, but she was not having cash because her father has gone out of station and he forgot to give her the money for uniform. So Sonu purchased the uniform and told Shah Rukh Khan sir that my father will give you cash tomorrow when he is back in the town. And Shah Rukh Khan sir happily agreed that Sonu, beta, don't worry. I know you, I know your father. Take this uniform. Do let me know how it is. If you need any alteration, do let me know. I'm here to help. Don't worry about money. I know your papa will give me tomorrow. Okay. So here you understand that typically two sales have happened of 1,000 rupees. That is, the sales is 2,000 rupees. Now, from this example, if you understand, in cash accounting system versus accrual accounting system, in cash accounting system, I will report sales as 1,000 rupees in income statement because there's a cash basis of accounting. Whatever cash has been reported, only that will be reported. So in this particular case, Tinu has paid the money for the sales. Sonu has not paid. So in cash system, I will report 1,000 as my sales figure. But in accrual system, I will report sales as a 2,000 rupees in P&L in income statement, and rupees 1,000, which amount is due, will be appearing in the balance sheet as account receivables. If this much is clear, type super clear in the chat box. We took example, we took images, we brought Shah Rukh Khan sir into picture and everything. If up till now everything is clear, just type in super clear in the chat box. So now here, if you look at your income statement, which I already discussed 2 videos back, in case of an accrual accounting system, my sales is appearing at 2,000, less all the expenses, this, that, blah, 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 blah. But I will not be having a cash of 2,000. I will be having cash of only 1,000 because 1,000 is still to be received. So for this accrual accounting system, whether money is received or not, sales, in fact, incomes, as well as expenses are reported on the basis of accrual. So to get an idea about how much cash actually business is having, what is the cash position of business? Will the business be able to pay its expense? Will the business be able to invest in assets? Will the business be able to pay its debt? We prepare the cash flow statement, and we adjust all these things which are a non-cash. So cash flow statement is broadly divided into three parts. Cash flow from operating activities. I'm going to show the live cash flow as well. Don't worry from that. Cash flow from investing activities and cash flow from financing activities. This, if I have to tell you this in simple things, cash flow from operating activities will look at your P&L, like how much cash business is generated from its core business, that is buying and selling and manufacturing, salaries and all that. Investing activity will look at how much cash has been generated or how much cash outflow has occurred because of investing activity. And financing will talk about the liability side of the balance sheet. That is something we're going to discuss as we move in the video. So operating activities. Operating activities or cash flow from operating activities typically shows cash flows generated by the business from its core business during the accounting period. What do I mean by core business? Core business means procuring raw material and selling the goods. That is the core business. See, if a business is purchasing shares, if a business is purchasing fixed asset, if a business is raising equity, if business is repaying debt, that's all. But that's all okay. It's not the core business. It's not something that a business do every single day. So what do you mean by core business? Core business, according to me, is something which a company does every single day, every single moment, day in, day night. That is its core business. Okay. And operating activities is a very, very important part. Very, very important. Operating activities or cash flow from operating activities will exactly show you whether the operating cash flow, matlab the business cash flows, are positive or negative. And let me tell you, if you are trying to invest in any company, operating cash flow must be, must be, must be positive. If any company has a negative operating activities cash flow, I would recommend don't invest into that company. If this part is clear, just type in clear in the chat box, please. See guys, please, you're here for learning. I know you are serious. If you're watching this video on 8th minute, that really shows you are serious, you are super awesome. So do keep commenting. That will inspire me, that will motivate me, and I'll keep recording such wonderful videos for you guys, right? So that's about this. Because of a accrual accounting system, net profit is shown in the income statement and actual cash generated will be different due to receivables, payables and adjustments. And hence, I'll show you the real cash flow, how it looks like. So, generally, how do we get the cash flow from operating activities? We start from profit and then we adjust the increase or decrease in receivables, payables, and inventories. Like, just to give you one example, if last year my debtors or receivables was 10,000, this year it is 15,000. So it means that my 5,000 rupees of more money got blocked in inventory during the current period. So that much cash I have not received, so I'll subtract that. Again, if you're finding these things too typical, like subtract and add, don't worry about that. Anyway, you are not going to prepare, you just have to look at it. And we're going to cover this at great depth again when we will come to the ratio. This is just a bird eye view, don't worry about that. Okay. But I'm giving you an idea, I'm giving you logic that if debtors have increased, that means my receivables have increased, and that means my cash is actually reduced. I hope you are understanding, right? Okay, next. Payables, vice versa. If my payables have increased, it means I have not paid to my creditors, and that means I would be having more cash with me because I have not paid to my creditors. Inventories, if inventories have increased, that means I have blocked more money into inventories and my cash flow would have reduced. So that's how you adjust it. Moving further, investing activities. This typically looks at the asset side of balance sheet. Simply speaking, operating activities looks at the income statement, like how much cash has been generated from the income statement. Investing activity typically deals with the cash flow from asset side. And now let me tell you right here, right now, that financing activity will look at cash flow from the liability side. So what typically does it include? Purchase of fixed assets, sale of fixed asset, investment if company has made any. If cash flow from investing activity is negative, that means there is a cash out. See, understand this. Positive means company has received and negative means company has paid. So negative cash flow from investing activity means that company is investing into its fixed asset, company is investing more. And according to me, negative cash flow as far as investing activity is concerned is good. I repeat, negative cash flow as far as investing activity is concerned is good because that typically shows companies investing, companies procuring more plants, more machinery, more factories. It is investing, it is expanding, it is boosting its capex, and that's really a good sign. That means company is in the growth stage. And if the cash flow is positive, that means company has received money by selling or disposing of the assets. Ideally, this is not a good situation, right? And financing activities. So as I said, it deals with the liability side. It shows how funding has been arranged by a company during a particular period. Its cash flow from financing activities are negative. That means company is paid back its fund. If there was a debt, company is paid back. It can be equity or there is a buyback. Again, it's a healthy sign that company has been able to repay its debt or it has been able to bought back equity. That means company has got a good liquidity and it's a good sign. And if the cash flow is positive, that means company has taken more fund. Again, now here, it gets a little tricky. You need to understand this. If cash flow from financing activity is positive, it doesn't mean company is bad. It actually means that company is taking more funds, company is borrowing more funds because it wants to expand. So, here where analysis gets a little tricky, and that's where you need to understand the things. So, this is a Reliance Industries cash flow statement, which I have downloaded from the screener.in. Due credit to screener.in. You can see that it has been divided over here. Cash flow from operating activity. They've started from profits per operation, then receivables have been adjusted, inventories and payables. So you get working capital changes, then direct tax payment has been subtracted. So you get cash from, on the top they've shown cash from investing activity. And if you see in the Reliance, year on year, cash from operating activity is positive, and not only that, it is increasing. If you look at the 10 years cash flow statement, in 2014, cash flow from operating activities was 43,261 crore positive, whereas in March 25, it is 1,78,703 crores positive. That tells the story of Reliance. Look at the cash flow from investing activity. It has been further divided into fixed asset purchase, and you can see that it is constantly negative. That means Reliance has been expanding in the past few years. They invested heavily as far as geo is concerned, and that is something that you can see from the year 2017-18 onwards. In fact, 17 I guess they started building the geo. 78,000 crore, 73,000 crore, 93,000 crore, and in the latest few years they've invested 1.52 lakh crore, 1.39 lakh crore. So they are investing huge money. That's good. Fixed asset purchase, that means company is growing, company can see good future, and so on and so forth. So you can go through all the list. And then last is cash flow from financing activities. So again, you can see that proceeds from share, uh, proceeds from borrowing. Reliance has borrowed the good money as well. Repayment of borrowing. In the past few years, Reliance has been very aggressive on repayment of debt, particularly after the stake sales of Geo during the COVID time. They've been able to pay huge, and that is something that you can see in the year 2020. 2021 they could repay 1,16,000 crores of debt. That is where they sold the stakes and all that. So this really shows that Reliance is in good shape. Operating inflows are increasing, company is heavily investing, so investing activity cash flows are negative, and financing are also mixed. So this is how you interpret. Again, this is a bird eye view. Don't worry about anything that you don't understand. We're going to have a look at all these things in a great depth, and we will dive more deeper into stock selection and all that. We're going to be giving him some tools as well. Stay in touch with the channel. Thanks so much for watching this video. And before you leave the video, hold on. I want you guys to comment in the chat box for me. What has been your biggest learning from this particular video? Do let me know in the chat box and I'll be reading your comments. Thank you.